Okay, I've got some bad news and I've got some good news. The bad news is that throughout most of the video, you won't be able to see my face. And I know you want to click off the video, but the good news is you'll be able to identify engulfing patterns, you'll know how to trade them, you know what to avoid, and how to spot the best potential setups. But first things first, I need to show you what an engulfing candle pattern is. Okay, so first I'm going to show you what an engulf pattern actually looks like. So you can see that I've drawn two candles here, and the candle on the right has a much larger body than the candle on the left. So we say that the candle on the right is an engulfing candle. And there are two main types of engulfing candle patterns. You've got a bullish engulf and a bearish engulf. Okay, so now I'm going to show you what a bullish engulfing pattern looks like, and it normally indicates that price is reversing back upwards. Okay, as you can see, I've drawn price coming down, and now this blue candle engulfs the previous red candle, and now we have a bullish engulfing pattern, and this indicates to us that price is reversing and going back up. So as you can see, I've drawn price going up, and you can see my drawing skills really coming into play in the last one. And at the bottom there is where you would have your stop loss. So if price didn't reverse and go upwards and it continued to go back down, that grey line there is where you would have your stop loss. So if it was hit, you would exit the trade, as the bullish engulfing pattern has now failed, and you would exit at the loss. Okay, so now I'm going to show you the bearish engulf pattern, which is the exact opposite of the bullish engulf pattern. Okay, so you can see I've drawn price ascending, and then this next red candle engulfs completely the previous candle. So now we have a bearish engulf pattern, and this indicates to us that price is reversing and coming back down. As you can see, I've drawn price declining, and if this wasn't the case and price kept going upwards, we would draw a stop loss just above the pattern, and if price was to hit the stop loss, we would exit the trade, as the engulf pattern is now invalidated. Okay, so now you know the textbook examples of bullish and bearish engulfing patterns. Now you need to learn how to trade them, and engulfing patterns are normally traded from support and resistance lines, trend lines, and moving averages. Okay, so first I'm going to show you how to trade bearish and bullish engulfing patterns using support and resistance lines. As you can see, I've drawn two levels, a resistance level up above here and a support level down below here. These are fairly strong levels. As you can see, price has been rejected from it and contained. So first I'm going to show you how to trade a bearish engulfing pattern using resistance level. So you can see price moves up, gets rejected by this level and comes back down, and then retests the same level, and this time we get a bearish engulfing pattern here. This bear candle here fully engulfs this bull candle. This indicates to us that price is going to reverse and it won't break this level here. However, if price did break this level and ignore this bearish engulf pattern, you would have a stop loss just above these wicks here. So if price was to hit your stop loss, you would exit the trade and accept the loss. On the flip side, you can see this candle has a very long wick down here and got rejected from this level here. Eventually price came back to retest this level and gave us a bullish engulfing pattern. You can see that this bull candle completely engulfs this bear candle, indicating to us that price is going to reverse and it won't break through this level. Again, if the bullish engulfing pattern failed, you would have your stop loss just below the candle, and if price was to hit your stop loss, you would exit the trade, as the bullish candle pattern has now failed. Okay, so now I'm going to show you how to trade engulfing patterns using a trend line. As you can see, I've drawn a trend line here, and this indicates to us that price is an upwards trend, and once price comes back to retest this trend line, you can look for engulfing patterns to take the price back up in the direction of the trend. So if I zoom into this section here, you can see that price came down, retested this trend line, and there was an engulfing candle here. This indicates to us that price will reverse at this trend line and continue its upwards trend. And as you can see, price continued going up till eventually it came back down to this trend line. As you can see, there was no pattern indicating to us that the trend will continue, and as you can see, it broke through and the downwards trend continued. Okay, so now I'm going to show you how to trade engulfing patterns using a moving average. On this chart here, I've got the 200 moving average, and as you can see, price is trending above it, showing us that price is in an upward trend. So if we're looking to trade this, we can wait for price to come back and retest the moving average and give us a bullish pattern showing that the upwards trend will continue. So if you look here, you can see that price moved in the upwards trend, came down and retested this moving average, and if I zoom into it, you can see that there's two engulfing patterns. You can see this bullish candle engulf this bear candle, and this bullish engulf the previous two bear candles. So this indicates to us that the upward trend will continue and price won't go through the moving average. However, you can see when price came down and retested the moving average here, there was no bullish pattern indicating that price will reverse and price continued down in a downwards trend. Obviously, engulfing patterns won't work all the time and you will have some failed trades. On your screen here, you can see that price is in a strong downtrend before it reached this level here. Then price started to increase in an uptrend until we reached this engulfing candle. We have a bearish engulfing candle here, which engulfed this previous bullish candle. This indicates to us that this smaller uptrend might finish and the larger downtrend will continue down. As you can see that the trade failed and price continued to go up. With every trade you would have a stop loss, and with this trade your stop loss would be around here, just above the engulfing pattern. Obviously you can see price did not fall and it continued to increase, and this candle here would have taken you out the trade and hit your stop loss. So you can see that price is in a strong downtrend, and then we get a bullish engulfing pattern here. This bullish candle engulfs the previous bearish candle, giving us the pattern. But you can see that price continued downwards and the pattern failed. With every trade you take would have a stop loss. In this case it would be just underneath the pattern here, so this candle would have taken you out. So it's best to trade these patterns with other tools and indicators to help you make the best trade. Okay, so now you know how to trade them. Now you need to know what to avoid. For an engulf pattern to be valid, the market must be in an uptrend or a downtrend prior to the pattern. Don't make the mistake of entering a trade just because you can see one candle is larger than the other. You can see that price declined towards the support level. However, price did not break through the level or reverse. It just started to consolidate and range along the level. You can see that the last candle on the right engulfs the previous bear candle on the left. However, this is not an engulf pattern because there was no prior ascend or descend in price. But if this candle here was to engulf this candle here, then that would be a valid engulf pattern, because you can see that price was in a downwards trend and the engulf pattern indicates to us that price is about to reverse. Okay, this is Aodu NZD on the daily, and I'm just going to give you a real example of what I'm talking about. As you can see, price is in a weak downtrend and you get many engulfing patterns. You get one here, get another one here, get another engulf here, and you can see that none of them are actually working. This is because price is just ranging along this level and there's no prior trend to it. However, at the end you can see price does eventually break down, and this is a completely different strategy called a breakout. So that's completely different to an engulf, and if you're wanting to trade an engulf, a market that looks like this is not the place to do it. So now you know what to avoid. Now I'm going to show you how to spot the best potential setups. Over my time in Forex, I've seen a lot of engulfing patterns, but there's a certain variation of the engulfing pattern that I've noticed that works better than the generic one. Okay, so in front of you now is an engulfing pattern that I've had more success with than the generic version. As you can see that the candle on the right has a larger body than the candle on the left, so we still have an engulfing pattern here. However, the wick of the candle on the right is much larger now. So this tells us that price broke through the support and travelled quite far before being rejected and closing back above. And this indicates to us that the buyers have a bit more control in the market and that it's likely that price will reverse. For this pattern to work well, you need to make sure that the length of the wick is at least half the length of the body of the engulfing candle. Okay, so now I'm going to show you how the bullish pattern would look like in a chart. Okay, so that's where our support line is, and price is declining towards that support, and then we get the candle with the long wick, which shows that price went below the support and rejected and came back up and closed above, and we have the body of the candle engulfs the previous body, so now we have an engulf as well. It tells us that price is going to reverse and continue in an upward direction. As you can see, I've drawn price increasing. Now I'm going to show you the bearish pattern, which again is the opposite of the bullish pattern. So that's our resistance up there, and price is heading towards it. And now we get the red candle and the long wick, which goes above the resistance and then comes back down and closes below it. So we get that rejection, as well as the body of the bear candle engulfing the previous candle. So this indicates to us that price is going to reverse and come back down. As you can see, price declines. Okay, now I'm going to give you an example of the pattern in the real market. So you can see that this part of the market is in a small downtrend. If you look here, you can see there's a bearish engulfing pattern with a longer wick. There was a small pullback in price here. Now we get this bearish engulfing pattern telling us that this small downtrend is going to continue until we got down to this bullish engulf pattern. As you can see, we have another bullish engulfing pattern with a longer wick. This candle here tells us that this smaller downtrend can be finishing and a new trend to the upside could be commencing. And as you can see again, that's exactly what happened. Another type of engulfing candle pattern that I've had more success with is when 2 or 3 candles are engulfed at the same time. As you can see on your screen, this is a bullish engulf candle pattern, and you can see that the engulfing candle engulfs 3 of the bear candles. This is an impulsive move and indicates that the buyers are gaining more control in the market. Okay, so now I'm going to show you what I've been talking about in the real life example. So you can see prices in the downwards trend, and then it becomes very weak around here. Then this candle here engulfs 3 of these bear candles, indicating to us that there's a potential reversal in the market, and this level here may not be broken. And as shown, the engulfing pattern was successful and price reversed back upwards. Okay, so now I'm going to show you the bearish version. Okay, as you can see, we're in a strong downtrend here until we reach this level here where we get a smaller uptrend, and then we get the big bearish engulfing candle which engulfs 5 bullish candles, indicating to us that this smaller uptrend is over and the larger downtrend is going to commence. As you can see, that this candle here is very impulsive and the engulfing candle worked. Okay, so thank you for making it to the end of the video. To conclude, you've learned how to identify engulfing patterns, how to trade them using support and resistance, trend lines and moving averages. You know now what to avoid, and you also know what to look for. So basically what I'm trying to say is, if you haven't subscribed, then what are you doing? But in all seriousness, I hope you've learned something today. And if you have, please like, share, subscribe, and hit the bell so you don't miss an upload. And please comment if you found this video helpful or if I missed anything. But till the next one, I'll see you later.